Talking about risk management today. You see, this risk management is a very important topic because it's the core of every trader. Like what you need to know. This is the secret. Do you understand? This is the secret. Like this is the secret none of these traders will tell you. Risk management. You can wake up, you can see a lot of people with their winnings online and all that. But if they should show you the losses also, you'll be shocked. A lot of them have already accumulated funds, maybe through investors and through trading for people with the knowledge they have. That's why you see them trading a lot of volume. So if you go through their history, there's no way any trader would not win or lose. Sometimes in a whole month, a trader can have losing streaks. Losing streaks throughout that month, he may not trade at all. The normal winning ratio in every trader's book, professional traders, whatever, the normal winning ratio is always like 70%. In some cases, you would see 80%. Some cases, you would see 80% winning ratio of all their trades in a month. Okay, there's nobody that have 100%. There's nobody that has 90%. You can have 90% if you are very very careful, very careful, and having 90% you will have a lot of patience. So patience is very important. It's very important in trading. Earlier this month, I know we had like three losses. So in as much as we had three losses, sometimes four, even five losses. There are some traders that have 50% win ratio and they still make millions in the markets. They still end up profitable after the month, at the end of the month. So let me break this down. Let me break this down so that we'll understand it, right? Let's use the base capital of 1000 for, let's say, beginner traders. Okay. If you are trading a prop account, how do you trade? How do you manage $1000 and follow a proper risk management rule? Now, the rule of thumb normally is one, not to risk more than 1% of your account. This is the real rule of risk management, of proper risk management. Now, this would only apply if you have high capital, like high volume of capital, like you're trading $10,000, $5,000. If you make 1,000, if you make let's take the base $1,000. If we say we are risking 1%, 1% of $1,000 is what? Is $10. 1% of $1,000 is $10. Now, most times our risk to reward ratio is about 1 to 1.3 RR. What does this mean? We are risking 1% of our total balance, total capital, to make 3% of our risk amount. What does that mean? You risk $10 to make equals $30 if it is a win situation. If it is a winning trade, A winning trade of 1 to 1.3 risk to reward ratio, right? So risk management is important. Now, why don't we use 1% risk? Why we don't use 1% risk is because our capital is small. Imagine risking just $10 to make $30. You'll feel like you are left behind. You understand? You feel like you are left behind. Now, when you risk $1 to make $10, that means at the end of the trade, you are making what 130. That will look small to you. It will look small to you, but on a long run, that's how to properly risk. Now, there's a better way to do this. First, we have a good edge. All of you following my signal should know we have a good edge. In as much as we lose once in a while, there's nobody that do not have a losing time in the market. Nobody. Go and check whoever you want to follow or whoever is flashing anything for you. Go and check. The person has steady losing times. But what will reward him is when the winning time comes, and sometimes those winning times they run for a long period. Take for example our gold trade. Our gold trade last week did what? Gold trade last week. BTC trade last week. It did BTC did 1 to 1 5 1.5 hour 1 to 5 hour rather, not 1 point. I keep using 1 point. 1 to 5 risk to reward. That means we risked 1% to make 5 ratio. That trade went times 5 of any amount you risked. Gold did the same thing. Gold did the same thing. Gold did 1 to 4. Gold did 1 to 4 hour. So in the real sense, if you had risked your 1%, you could have made what 5% on your account. No matter the losing trade, you could have bounced back. Now let me give you a secret. Now the real secret of which risk management when you are using a personal capital, the real secret is this, is the 10 trade rules. The 10 what? The 10 trade rules. Now this thing is what you should hold on to when you are trading prop accounts, prop firm accounts, you shouldn't risk, do not risk more than one one to no sorry 0.5 to 1% of your overall capital. Why is it that if you follow the rules in what's it called, in a prop firm, they abide by these strict rules. You can't waste more than 3% of your capital. If not, you would not receive your payouts or you can get banned from the prop accounts. So in order to trade consistently and make withdrawals with any prop accounts, it's always advisable to risk 0.5% to 1% of your overall capital. That should guarantee you payouts at the end of the month or when it is your withdrawal window. You understand? And the issue or what you should look at is the bigger picture. Now, the bigger picture is your risk to reward ratio. That's what you should look like at. Don't look at your capital. Don't look at your capital. Don't look at it that you want to make in as much as you think it is little. In as much as you think it is little, I'm telling you that you can make a lot of money. Now let's use a $10,000 prop account, for example. $10,000 prop account, prop firm account. Now on a normal 10,000 prop firm evaluation account, they would tell you, let's take this out first. They will tell you your minimum drawdown is what your daily drawdown drawdown is what 5%, 5%, and your overall drawdown is 10%. What does this mean? This means that the $10,000 is not your profit, is not your money rather. Instead, the money in that prop account is $1,000, because now your minimum drawdown is what is 10%. Your minimum drawdown is what 10%. So that means inside the $10,000 account, all your mind should be fixed on is that your own personal trading money in it is what $1,000. So in as much as you are saying that is $1,000, you think risking 1% is small? No, it is not. Because if you risk 1%, we go back to this. If you risk 1% of what of $1,000, if we risk 1% of $1,000, that's $10. $10 will give you $30. Okay, and in a prop account, you only need what? You need 5% to pass what? Phase one. You need 5% to pass phase one. So you saying $30 thinking it is small. Over time, sometimes you get good trades of what? 1 to 5 hour. So that's no more $30. Now you are getting $50. So 5% of what? Let's do the math. 5% of what? 5% of $1,000 times 5 divided by 100 is what? 50. If you add 50 to $1,000, what's that? Sorry. 5% of $1,000 what's? Sorry, I'm making a mistake. $1,000. Yeah, we are going back now. You need 5% to pass your phase one. So 5% of $10,000 of the initial capital to pass phase one. Now this is all for a prop firm. Okay, this is all for a prop firm. Now the good news is this: I have a better risk to reward ratio. Now I know you are looking at it that 1% is small. How do you finish up and all that? I have a good way of passing your prop firm, or good way of managing your risk, whether your personal capital or whether your prop firm capital. Now this is it. You knowing that you have only $1,000 in for your prop firm, since it is what it is, the base drawdown of all your capital. That means you have only 1,000. If you go below this 1,000, you've breached the account and you've lost the account. So let's use 1,000 now as what? As our base capital. Let's clear all this. Let's go back. Use 1,000 as our base capital. So this 1,000 now is like personal, whether it's personal funding, whether it's prop accounts, however you want to calculate it, just know that you have $1,000. Now with so much research online and knowledge and practice, I've understood that if you have a good edge, if you have a good edge, a good edge. Now a good edge should be able to deliver at least a good edge, which should be able to deliver at least 50% win ratio at the end of the month. Right? I'm using 50%, which me backtesting my edge, I have 70% win ratio. Okay, if I'm trading properly, right? I have 70%. But now let's use 50%. Now you have what? 1,000 as your base capital. $1,000 as your base capital. Let's just go straight to the point. As your what? Base capital. Be it personal capital, base capital. Now I would expect you to what? Apply the 10 trade rules. Now, what is the 10 trade rules? The 10 trade rules is what? Breaking down your $1,000 divided by 10. $1,000 divided by 10. Now, why is this good for you? Now, it's good for you because you dividing your $1,000 by 10 would give you what? $100 per trade, making you what? Now you have 10 shots to blow your $1,000. Am I making sense? So you have 10 shots to blow your $1,000, right? $100 per trade. Now let's assume the first five trades. Now let's say the first five trades is a loss. Now you lose what? You lose what? $500. Don't panic, because why? Remember, your winning rate is what? 50%. That's your winning rate overall is 50%. If you believe in your edge, let's say that month is not good, or in between when you are trading, you lose your first five trade. And I'm sure most of the times it's impossible to lose your first five trade. You can lose one, lose two, gain one, or lose one, gain two, right? But sometimes let's just assume you lose $500. Now remember, your risk to reward, basic risk to reward is what? 1 to 3 RR, right? 1 to 3 RR. Now, if you lose 5 trade, which means you are risking, this means you are risking $100 to make $300, right? You are risking one of your capital to make times three of your capital. That's the meaning of risk to reward. This is more important than even your capital. Okay, so this is on the average, and I like to aim for 1 to 4 risk to reward, 1 to 5 risk to reward. But I'm using this for an example. Let's just assume our risk to reward is 1 to 3 hours. So we are risking 100 to make 300. We lost our first trade, our first 5 trade, which is $500. Remember, you are risking just $100. So you lose 5 trade, which is what? $500. Now you have what? A base capital left. You have $500 left. $100 left of your capital. This is where you should understand that fear does not come in the market, since you have an edge that gives you what? 50% win. Okay, you have an edge that gives you what? 50% win. So you are confident that even though you lost 500, that means your next 5 trade should be a win. So let's assume now the next 5 trade what is a win. Next 5 trade becomes a win. So let's do the maths now. $100 $100 to make 3%, which is $300 times 5. Let's do the maths. Now the next 5 trade was a win, so you made $100. Remember, our win risk to reward is 1 to 3. You risked 100 to make 300, right? So $100 to make times 300. No, sorry, $100 is to make 300. So that would be 300 since we won. So that means we won all 5 trades. So that would be 300 times 5. That's a mistake. 300 times 5. $1,500, which will make it what equals to $1,500. Do you see how risking well it will make you profitable at the end of the day? Although you lose 5 trades, but the next 5 trade became a win. Do you understand? The next 5 trade became a win. If you win the next 5 trade, risking 100 to make 300, that will give you 1,500. You still came out profitable. Now imagine the last 2 trades we took, which was BTC and gold. BTC and gold were delivered 1 to 4 RR and 1 to 5 RR, right? 1 to $100 to make $500, which will be times 5, will be equals to what? Let's do the maths. $500. You want 5 trades times 5. $2,500. 25. So do you see now that you still came out profitable? So the main thing for a trader, the main objective of a trader is learning how to guard your capital. Very important. Very important. Very important. So don't go into the market without a plan. Have a plan. Have a plan. Have a plan. Calculate your risk. Enter every trade with confidence, knowing you will come out profitable at the end of every trading month. Okay? Have a plan. Now, what's having a plan? Having a plan is you was knowing that okay, tomorrow I am trading. Any trade that is called, I will calculate my risk. I have a plan not to risk more than 10% 10% of my overall capital using the 10 trade rules. Calculate your risk. How do you calculate your risk? How do you calculate your risk? What's this thing doing now? How do you calculate your risk? Use risk calculator. I gave you use what's it called? Position size calculator. Okay. I'm not going to what's it called? I'm not promoting anybody, you get, but let's check what's it called? There's one place I funded next, position size calculator. I think I put it on the what's it called, on the page. Now this is it. It says funded next position calculator. How do you use it? Now if at all I call you a trade, let's say I call you a trade now. I call you a trade. I say what? Gold, sell gold, stop loss, TP, right? You use your fundedness calculator. You go there, you look for gold, XAU, USD, you calculate it. Your account balance, if it's $100 or if it's $1,000, your percentage you use 10%, right? Entry price, you go to your what's it called? You go to your forex pair, then you look for gold. You look for gold, you look for gold. The entry price is always what? It's always this price where the market is at. The entry price is always this price where the market is at. So which is 4064. You go there, you impute it. 40664. The exit price would always be what? The SL price. That's the stop loss price. Stop loss price. Now you put your stop loss price. Calculate. Now once you click calculate, it gives you the lot size to use. When you go to your MT5, you impute your lot size so that you know that okay, this lot size, once I put my stop loss and my take profit, I am risking what? Only 10% of my account, which is what? $100. It could be 100, it could be what? $100. You calculate, it gives you another loss side, but $100 risking 10% won't really show that, because this is gold. Gold is very volatile, so $100 wouldn't be able to trade gold using 10%. But if you use 1%, you can see it still will not give you. So $1,000, $500 is permittable. That's why if you are below $500 trading gold, we just advise you to use 0.01 lot size, because that's the least you can trade on gold. And most of the time the stop loss will be like 20 or what, or 10. So that's why if we say 500 and we do what, 0.1 0.5%, okay, 0.1%, this doesn't show. So let's use a more because I want you all to get it. Let's use a pair that is not really volatile. Okay, let's say Evo USD. Evo USD now. I said buy now. Okay, now you are risking what? 1%. Sometimes I give you this zero lot size because I help calculate people that have like $100 in a smaller account. So I help you calculate it so that you won't go astray, and I give you the amounts you would risk on it. Okay, so let's use Euro USD for example now. Euro USD, right? You have $1,000 and you want to risk what? 10%. 10% Euro USD. Now it asks you for the entry price. Entry price, you go to Euro USD, right? You go to Euro what? Euro USD. The entry price is always what? Is always the the market price, which is 1.15105, right? 1.15105. 1.15105. And your exit price will be what? Your exit price will always be what? The TP price. Sorry, the SL price, the stop loss price. That's the exit. So that when the market exits that place, it stops you out. Once it stops you out, you know that you are losing only what, 10% of your account, which is $100. So this is the lot size. You using this calculator is to determine what your lot size to use on your account. Use position size calculator to know the exact lot size to use on your account, so you can what, so you can know that you are using risking only $100 or 10% of your account to use on your account, so you don't go below using or above using just $10 of your account. So there's no way now you follow this risk plan that you would lose. It's not possible. This is the core truth about trading that nobody will tell you. This is the secret. This is it. Risk management is the secret. The only time you blow your accounts. When do you blow your accounts? You blow your account because what? Why you blow your accounts? Why do you blow your accounts most of the times? It's a proven fact. Why do you blow your accounts? One, you blow your account because why? You are over leveraging. Over leveraging. You're over leveraging. Using bigger account, bigger lot size to generate quick quick what profits. It will end up you will end up in tears. As your professionals, anybody, you will end up in tears. Nobody over leverage. The highest amount of capital you use when you are trading is 5 to 10%. 5 to 10%. People do 1 to 2 ratio and end up with 50% win rates, and they still come out millionaires because they stick to these rules. As much as you think that 10% or 5% is small, you will be very amazed how fast your account will grow if you stick to it. You will be very amazed how fast. The only time now you want to chase quick profits when you are over leveraging, you will blow your account and you will start again from square one. Now, why do you blow your account again? Looking at other people's success. You see that Lamborghini on somebody profile, he made it through trading. You don't know what he's doing underneath. You don't know if he's really trading. Even though he's really trading, you don't know how many years it took him to get to that place he is. You don't know. If you want to know, ask most of these people that now they are doing big in trading. Check it. See how long they've been trading. Some of them 9 years, some of them 7 years, some of them 5 years. Go and check it. Okay? I'm giving you all this code now so that you don't waste your time now and repeat mistakes that people have made in the past. So now realize later. So it can be quick for you if you just follow this exact rule. It can be very quick for you. Okay, don't look at other people's success, just follow it day by day. You know why? Your 10% today is not your 10% tomorrow. Do you know your 10% today, your 10% today is not your 10% tomorrow. Imagine you made, okay, one trade now, you made what? You made $300. Your 10% has increased. Your 10% is no more $10. It's no more $100. Your 10% is now what, like $130. Do you see the difference? Now you are risking $130 to make what? More. You understand? So don't over leverage. Don't look at other people's markets. If you don't have an edge in the market, do not force trade. You will blow your account. Don't go and do I too know on the market. The market does not, it doesn't care about your emotion. It doesn't care whether you are losing. It's there to make you lose. It's there to make you lose. So if you don't have an edge in the market, don't force trade. Thank God you are following somebody like me now that I call trades for you. The same way you lose, the same way I lose. If you win, I win. If I win, you win. If I lose, you lose. But what we can control in this market, what is our risk management. In as much as we lose one, lose two, the third one can be a good trade that will run a long time. That would run. If you held on to BTC and gold till now, you are still in profit and it will still run to that point I said it will run to. If you check it, it will be a good trade and you'll forget about the losses you've made. Subsequently, 2, 3, there are days that will have back-to-back winnings, 2, 3, 4 wins in a row, and imagine what would happen to your account. But if you blow your account now, tomorrow you won't have money to trade. You will be filled with regrets, and now you have to start all over again. So, what did you learn from it? If you go back, start all over again, and do the same thing, it is very easy to make that mistake because now you want to make the money back. Do not revenge trade, okay? Don't revenge trade. Do not revenge trade. And what's the rule to this? Once you lose trade, Once you lose two trades in a row, two trades in a row, right? Stop trading that day. Go and kick dust. Go and breathe in and breathe out. Take a walk. Once you lose two trades in a row in a day, eh, just stop trading. Wait for the next day. Risk your 1% again. Do you understand? Risk your 10% again, rather. Stop trading that day. But if you have the idea that no, I want to go back and get this money that I lose, my brother, you will lose that whole capital. It will be like flash in your eyes. This thing has worked people with a lot of money, talk less of people with small amounts. $100, $500, $200, it is very small. Some people have ruined a lot of money, big capital, millions, investors' capital because of over trading. They want to go back and make that money back. They don't want to rest. So have a plan. Stick to this. Have a plan. Calculate your risk. Okay? Have a plan. Calculate your risk. Make sure you do that. Have a plan. Calculate your risk. First, have an edge. Okay? I think number one should be have a hedge. Have an edge. I'm not putting have an edge because why? You people are following me on my own trade, so that's enough edge. And if you want to learn more, reach out to me. There's the admin there. Reach out to me. I will teach you how I trade. Okay, I'll spend time with you, teach you how I trade. Okay, and it's in fact teaching you how to trade is just 10% of the whole um um trading career. Teaching you is the main goal, or the main idea of trading that will make you win is what? Psychology. And the main thing in psychology was is this risk management. Risk management is very important. This is what will keep you long enough in the game. You have to stay afloat. Okay, okay. That is why I always keep at the end of I understand what the damage risk management does to people. That's why I always stay afloat. Your main aim as a trader is to what? Guard your capital, protect your capital, so that when the good trade comes, you will laugh and be happy. You will ride it for long. But when the good trade now, some people would have blown accounts. They would have traded one, two over leverage. Now maybe you have $1,000 now. You've traded, use $300. No plan. Tomorrow another trade is called. Instead of you to calculate it, you say no. You're using what? Big, bigger lot size. Maybe you use $200. You are not even calculating it. How do you take this as a business? Trading is a business, a career. If you go to school, you learn for 4 years. You come out, you go and work. When you are working, you don't just throw things up and about. Imagine like you are working as a cashier in the bank now. Would you just go and just collect money from someone and tell him, don't worry, I'll deposit it for you, and then you keep it somewhere, then later you come and just say, let me just deposit 900 of this person's money. It's not possible. You calculate it, you document it. So that's how you should treat trading. This is not a get rich quick opportunity. Okay, it's not sporty bets. You don't just throw money. Treat it like a business. Okay, treat it like a business. Treat trading like a business. You have to treat trading like a business. If not, it will burn you. Don't just come and because you wake up one day, you go on Instagram or you go on Twitter, you see somebody buying Lambo, is saying I made it from trading. So you want to turn your $100 to $1 million. It doesn't work that way. It doesn't. Never has it worked that way. And it won't start with you. So don't over leverage. Don't mess your psychology up. Okay, don't do that. Okay, the main goal is to stay afloat. Respect these trading rules, and I promise you, look at your accounts in the next 1 month. You'll be amazed. You'll be amazed. Okay, from next week now, I'll be trying my best to calm down. The days that we wouldn't see trade, I wouldn't force trade, because sometimes you get pressure to just come online and want to force trade because we've not traded since Monday. This Wednesday we've not traded, and maybe we just have to wait one more day for the good trade to play out on Thursday. Okay, in a month you don't need, in a week you don't even need more than one or two trades. You'll make all the money you want to make. Do you understand? You will. I've turned down all my watch list now. If you check my watch list, you'll see that I have just what I've even removed gold at the time. Okay, you see I have what I have: one, two, three, four, five, six, seven, just seven pairs on my watch list, right? And they are correlating pairs. This is GBP JPY, this is GBP USD, Euro USD, this US 30, SPS and Nasdaq. They are the same vibe. You can see how they move. The same thing. The same thing. That's how they move. So um, next week, as those of you using Access Markets, you can't trade NAS. So I've supplemented it, exchanged it with what SPX. So we'll be able to trade indices with SPX. It's the same movement with NAX, just a little bit volatile than NAS. So the main idea at the end of the day is to what stay afloat. I will save this document and I'll send it to what the channel, so you can go through it and listen to what I have to say on the video. Okay, so um, that's that on risk management. Please stick to it. This coming week will be very interesting. Just know that from next year, take trading seriously, because we are already at the end of this year. Okay, most of us did not make the goals we set for ourselves, and that's okay. Okay, that's okay too. Okay, it's a sprint, not a marathon. I mean, it's a marathon, not a sprint. Okay, it's a marathon, not a sprint. It's a marathon, not a sprint. If you can just stick to these rules, I'm telling you, your speed to profitability will be fast. But if you go and over leverage, you may be fast at the beginning, you may be seeing good profit. The day it will bite you in your butt, huh? The day it will bite you in your butt, you will lose all your money. You would. I've seen it happen over time. It has happened to me. It has happened to the best traders you will ever see on the planet. Okay, there's a trader that made a lot of money, and when the 2008 market crash on property happened, what happened? He lost all his money because he bet big. He didn't even make it home. He committed suicide on the way home. That's what trading will do to you if you don't stick to your rules. When Bitcoin crashed, we heard of another trader that shot himself in his car because what? He was so overconfident that he bet big and he lost a lot of money. So don't be those guys. The only thing you can control what is your risk management, and if you can stick to this, I'm telling you, your your speed to profitability will be faster. Okay, so this is it for today. Every week I think I'll be dropping trade breakdown so that you can see how I trade, how I mark up the markets. It would help one or two people, to understand the market better. And if you want to, one thing you should know is that I treat this my channel like a journal, like my own personal journal. So I speak my mind on it, I trade on it, I say things I want to pass across to my own self. So it's not really even about you guys. I'm trying to talk to myself. When I lose my emotions, what I was doing at the moment, I state it on the channel. So I keep myself in check. So I go back to it and I go through the week what I do. Okay. So make sure you what stick to this risk management. Please, it's very important so that you don't come out with headache. You don't feel like, oh, you're a loser. Why is your own not going well? You know, no, if you can stick to it, I'm promising you, you would make money. You would make money. So I'll save this now and I'll send it over to what to the group, and also the video of me talking and breaking this down. So look out for the market outlook of this week, and how I trade, how I um, what's call out my trades and all that, how I speculate the market. Okay, thank you all for joining in. This text files of people find volume and I didn't say markdown. So thank you for joining in, and if you want to trade, make sure you use the link in the description. Make sure you use the link in the description. I'll send this to you, and I'll send the video.